Today's session is about Canadian tax season 2022. This session is intended for seniors and providing tips for this particular time of the year. So the first advice we have for you is file as early as possible. It's that time of the year again. Don't wait until your taxes are due to actually do what you have to do, okay? I'm more understanding about taxes. The contributions you make through your taxes are essential in helping fund many things, from building roads, bridges, to Canada's education and even the healthcare system. Therefore, paying taxes is a fundamental part of being a responsible citizen. So this is the table of contents we have prepared for you today. So we have the first stage, that is, what should you know about the taxes, some considerations. Second part will be more about the tax form related or specific to seniors and also provincial. We are going to discuss Ontario. The new and the important, don't miss any crucial details and resources. What pages and services are helpful for tax season? And what should you know? Okay. The Canada Revenue Agency e-file is a service usually available by February 15.
The e-file system is the electronic file system. And when we say it's available by February 15th, that means the Canada Revenue Agency is then ready to accept your 2021 tax return at that point. And filing electronically results, as it says there, in an assessment faster than filing by mail. You may be used to filing by mail. If you want to try electronic, that's absolutely something that's easy to do. And lots of tax professional companies can help you do that. It typically results in an assessment within 8 to 10 days versus your typical 3 to 6 weeks. Often it takes a few weeks for them to get through those. There are many tax preparing individuals and organizations that set their price hierarchy to be cheaper earlier in the season. It's partly obviously to get people in the door, but also if you file earlier, then that's better for them. The more complicated tax returns tend to come in at the end of the time that's available for people to file. And the last reason is if you have a refund coming to you, that money is sitting in the government's bank accounts, and why let them earn interest on your money that is owed to you? So the earlier you get your refund, the better.
So we are going to cover some tax forms from now on. And some of these forms are specific to seniors. And keep in mind also that there are printable and fillable versions of these formats and accommodation for those with a visual impairment.
It says on the slide, www.canada.ca is the Revenue Canada's website. And on that page, you can navigate to that area that has all of their forms available. And they are available. The guides are available also in HTML, which is a web page. So when you click on that, it just opens another tab that you can read through with links. There's also PDFs that you would just print off to be able to fill out by hand. Or there's a fillable PDF. And what you would do with that is download it to your device and then fill it out by typing into the boxes that you can fill out. And then once it's complete, you would then print that out and send that in as a mailed tax return. So the schedules that would be particularly important for seniors, there are 4 here that I've pointed out. The first one is Schedule 2. And I know that these names aren't going to mean a lot to you, but the description beside it does. The amounts transferred from your spouse or common law partner. So for this schedule, what this means is that if you are in a partnership if you have a spouse or a common law partner, if one person has a higher income than the other one, and usually it's significantly higher, there are 3 amounts that you may be able to transfer from that spouse, from you to them or them to you. Three of them are the age amount, which is a standard deduction for people 65 and older, the pension income amount, and even the disability amount. The disability amount is for anyone, but often, seniors may have a disability, and if that happens, then you could potentially transfer that amount. For Schedule 9, many seniors do give money to charities, and so I just want to highlight this schedule. That's the donations and gifts. Third one is Schedule 14. That is a new schedule, the Climate Action Incentive, that came in a few years ago with the Ontario government having the carbon tax separate from the federal ones. And it's not something, you don't need to know the politics behind it, but the Climate Action Incentive would have been something that would have been part of your tax returns for the last couple of years. This Schedule 14 is going to change this year. I'll get into that on a later slide. And the last one is Form T1032. This may not apply to very many people, but when we do talk about split pension income later on, that form does come into play. So the provincial forms, we're going to use the province of Ontario as a reference for these slides. As you may know, there are forms that are at a federal level, and then each province has their own tax code. So the Ontario forms that you might need to know about as a senior, the first one is our Ontario credits, which is form number ON479. And on that Ontario credits form, two things that I just want to highlight. One of them is the seniors public transit credit. So if you didn't know before, if you do get a Metro Pass with the TTC or with your local, I'm not sure if there are any other transit authorities outside of the TTC, but if you do have any sort of bus pass, if you have a receipt for that, you can claim that credit. The other item that's on ON 479 is the seniors home safety tax credit. That one is new this year, and that one is about making renovations to your home to make it safer. The other one of the other forms is the ON BEN, and this on this form, I just want to highlight the seniors homeowners property tax grant. And this one, the only thing you have to know for that is the amount that you paid in property tax for 2021. The ONS2 is the equivalent form to the one that I talked about on a previous slide, Schedule 2. This one is the provincial version of it. So it's the same deductions that I talked about before, the age amount, the pension income amount, and the disability amount, but those ones are at a provincial level. So you can get a deduction at both the federal level and the provincial level. So it's important that you do claim all the deductions that you are entitled to. And the last one is ONS 12. That one is the accompaniment to the ON 479, which is about the home safety tax credit. That schedule allows you to itemize any expenses that you incurred for that home safety tax credit. And that's what the CRA requires, is to put down the expenses that you incurred for that. The next thing that seniors should definitely know about is the pension deduction. So a pension deduction, we might talk about the standard amounts that seniors in Canada get, which are the OAS, Old Age Security Amount, and the CPP, that's the Canadian Pension Plan. So those two amounts are ones that most seniors get in Canada, but those two, as you'll see on the next slide, those are not eligible for the pension deduction. What the pension deduction is for income that you would receive in these other buckets: the RRIF income, RRSPs, foreign pensions, and any normal company pensions that you might receive. So as I mentioned, what doesn't qualify for that pension deduction: your OAS, your CPP, QPP, which is the Quebec version of a CPP, it's a pension plan, and any death benefits. I wrote here foreign source pensions that are tax-free in Canada. Some of these things do get a little bit more complicated to figure out whether or not they qualify. If you have any questions about it, any tax pro can answer those questions. So a general rule, if you do ask yourself that question, I do have some pension amounts, some income from OAS or CPP. Why does one qualify and another one doesn't? And the general rule is if it already qualifies for a deduction elsewhere on your tax return, it most likely doesn't qualify as a pension amount. And what that's about is that CPP and OAS have their own, not deductions, but they're treated differently than pension income. So the next thing I'd like to cover is pension splitting. So pension splitting, what this is for couples. So for someone with a spouse or common law partner, and what you can do with pension splitting is split out that income so that the spouse with a higher income doesn't have as much tax owing. You can reallocate some of that pension income to the other spouse to even out that tax payable. And keep in mind, though, that one thing is the spouse or common law partner does not have to be in the age range for a pension, 65 plus. But there are some other restrictions to it. So for pension splitting, because the income is reallocated from one spouse to another, there are a number of other deductions that also rely on the same kind of calculation of what the spouse's income is. And because those other deductions rely on that, for instance, the spousal amount, the many tax programs, if you're doing them by hand, you have to be really careful about this, but a tax program will likely split that income in an optimal way so that you don't lose out too much of the spousal amount when you're doing your pension splitting. So the second point here is tax programs will optimize the amount to split it. You can split and reallocate that pension income up to 50% to your spouse or common law partner. If you do that, be very aware that both spouses, first off, must file tax returns. And secondly, both spouses must file that form 1032, and they both must sign both forms. So the next thought here is RRSP age limits and RIFs. So the RIF, that's your registered retirement income fund. So if you have an RRSP and you're contributing to your RRSP, as many Canadians do, once you reach the age of 65, there are other limits on that, but the RRSP must be converted into a RIF by the end of the year in which the person turns 71. So it's not the restriction at 65. You can still contribute to your RRSP until you're 71. And that allows you to continue using your RRSP limits until you're 71. But at that point, you do have to convert it into a retirement income fund. And at that point, there's a minimum amount that must be withdrawn from your RIF. And your income at that point becomes whatever other income you have plus that RIF, and the amounts are taxed as they're withdrawn. So if the taxpayer has reached the age limit to contribute to an RRSP, they may contribute to a spousal account if their spouse is younger, but attribution rules may apply. So now we're going to talk about some new and important information for coming up for 2021, for the 2021 tax year. So what you're going to be filing this year is your 2021 taxes. So One thing that many seniors may have issues with is their income. If it's not any longer income from from employment income, like from a T4, if they don't have a steady job, that income from a T4, the company that employs them is required to remove tax payable and remit that to the CRA. They're required to do that at a particular tax level. But for your OAS and your CPP amounts, that tax level is lower. So the CRA, in fact, does remove tax from that amount that you receive, but it's never really enough to cover tax payable, especially if you have other income from other sources. So, two things that you could do to prepare for the tax time, instead of having a big outstanding balance to the CRA at tax time, two things you could do. One of them is to send tax installments to the CRA. If you think you're going to have a large tax payable, you could arrange that with the CRA so that you don't get hit with a big tax bill at the end. And the other thing you could do is take advantage of the tax-free savings account program that the federal government established. And I think it's probably about 10 years back now. So every year, each Canadian is given, it's now up to $6,000 room. So it's a lot like an RRSP, but it's all it is a savings account that whatever amount that you get in interest from that, you aren't taxed on that. So tax-free savings account. And what is highly advisable is that if you have room in your tax-free savings account space for depositing to that, then you can just open a tax-free savings account. It's the same thing as any other savings or checking account, and just deposit to that on a regular basis to be prepared for your balance owing at tax time. Some important changes for this coming year, and so for your 2021 tax return. The first most significant change is that climate action incentive that we have been filing as a Schedule 14, this year is now going to be changed from what's called a refundable tax credit. So that would be an amount that you get as an instant refund for your tax return. Instead, is going to be treated as a quarterly credit. So the Ontario government is going to roll your GST and climate action incentive amounts together into a credit. So you'll get your GST, but at the same time you get your GST credits, you're also going to be getting the climate action incentive amount as a quarterly payment. So when you file your taxes this year, and maybe you got a refund for a household, it may have been $350 last year. This year, that part will not be part of your tax refund at the filing time. It's instead going to be that quarterly credit. The second thing is an OAS benefit of $500 was paid on August 16th, 2021. So that payment, just so everyone knows, it is taxable, but it was not subject to the income clawback. And what that means is that if your income is above a certain threshold, you may experience a clawback that the government would want you to pay back a certain amount of money, but this amount would not be included in that income. And the last thing is what I've talked about before, is the Ontario Seniors Home Safety Tax Credit. So if you did any renovations on your home to make it safer, the tax credit applies not for renovations that are done in order to increase the value of your home. They only apply to renovations that are done to increase the safety in your home. And it's kind of vague how they would explain that, but there is information on the Canada Revenue website to help figure that out.
Medical expenses. So there are different types of medical expenses that you can claim, from doctor visits and prescription costs to assisted living devices like hearing aids, And also, in addition to these, things like air conditioning to improve your home's air quality can also count as a medical expense when it comes down filing your return. And here we have added a slide that shows a little bit more about how those medical expenses are taken into account. The list of this is quite extensive.
So I just want to point out that there are two places that on your tax return, there are two places that you can make expense claims. And I just want you to be aware that Canada Revenue, um, they treat medical expenses one way. And then there are other tax credits that you can take advantage of for other things. So for instance, on this slide, you see medical expenses you can claim. And in the second item says air conditioner. So if you have a medical condition that you needed to get an air conditioner in your home, that's one thing. But there's another spot about the installation of an air conditioner, which I think we'll get to, that installation isn't deductible. So what I would strongly suggest is whatever renovations or things that you did, especially due to COVID, if you did anything to your home to increase the safety, to improve your medical condition, to address anything like that, I would strongly suggest taking all of those receipts. If you visit a tax preparation company, if you do that, take all of those receipts with you so that you can claim them somewhere. The tax pro will know where to claim those. And in some cases, there are some expenses that you can claim in both places. And partly the reason for that is because seniors, they're a group of special attention for the federal government. So they want to make it easier for you to get even more of a deduction and um, fare better on your taxes than any other particular citizen. So I have noticed that there are a couple of places that you can claim expenses for both things. And so get it double counted.
Okay, and we are going to review a few resources that you can access to that will be convenient for you to review. And here it is.
The place that you're going to be going to for all of your tax information, the Canada Revenue website. Now we have here, this is one of the links that you can access, CRA, which is Canada Revenue Agency, .gc.ca, Government of Canada.ca. But if you just type in canada.ca, it goes to the same place. And then from that splash screen, from that website, you would just choose your language. So that website address looks maybe a little bit complicated, but canada.ca goes to the Canada Revenue website as well. The second thing I want to point out is that there are many resources to have your tax preparation done electronically if you are comfortable with that. So on the Canada Revenue website, this is the way that you get to it on taxes. So on the Canada Revenue website, you're going to taxes, and on the slide, it's got the path for it. So it's taxes, and then certified tax software is the last part of it. And on this website, it explains what NetFile is and how to e-file your taxes. And as Annie's going down a little bit farther, so here you're going to see find a free or pay what you want tax software. So they have a list here of many offerings that you can use, free or pay what you want tax software. Lots of options for you to be able to file electronically. So if you're comfortable trying it, and they also, I know many of these have really good helplines that you can ask questions about how to use the software, where to put certain deductions. They can help quite a bit on all of these sites.
And here we have like a video from 2021. Despite the video is from last year, there is a lot of good information here. So another kind of concern during tax season is this scamming situation. And the pandemic has led to new scamming opportunities, right? People try to take advantage of people applying for COVID related benefits. So we can talk a little bit about this and ways that you can protect yourself. There are many types of fraud out there, and new scams are constantly being invented. Some things that the CRA will never do is, for example, use aggressive language. They won't threaten to arrest you or send you to the police either, or even ask you for immediate payment by e-transfer, Bitcoin, prepaid credit cards, a gift card. They won't ask you for information about your passport, driver's license, or even your health card. And finally, leave personal or financial information on your voicemail. That is something that won't happen either. And by mail, they also won't do these kind of things. Set up a meeting with you in a public space to take a payment, demand immediate payment. CRA might ask financial information such as the name of your bank and the location. They will send you a notice of assessment or reassessment, ask you to pay an amount that you might owe, take legal action to recover the money you owe, just in the case you are not being, on time with your payments. And finally, they will write to you to begin an audit process if that's the case. And when you are in doubt, ask yourself the following questions. Is there a reason the CRA is contacting me? Do I have an outstanding tax balance? Am I expecting more money from the CRA? So those kind of questions will help you understand whether that call or even mail that you receive is an scam or not. Thank you so much for listening.